Good morning, everyone, here in Washington, D.C., and good afternoon to those joining us from Turkey and around the world. We are honored to have, Central Bank Governor Dr. Fatih Karahan today, just at the Atlantic Council on the occasion of his visit to Washington, D.C. for the IMF-World Bank meetings. And my name is Defne Arslan, Senior Director of the Atlantic Council Turkey programs, and I'm honored to host this event together with our GeoEcon team, headed by Charles Lichfield and his team, and also Charles will be moderating the session today. This occasion is especially very important for me. It is not only hosting Dr. Fatih Karahan, Governor of the Central Bank of Republic of Turkey today, but my father was also Central Bank Governor late 1970s, especially hosting the Turkish Central Bank Governor here today is especially, makes a huge difference to me, and it is also sentimentally very important. So with that, let's continue with our, session. And as I said, it is always a pleasure to work closely with our GeoEconomics Center to convene discussions with Turkey's leading economic policies. Earlier this week, we hosted a terrific discussion with Minister of Treasury and Finance of Turkey, Mr. Mehmet Şimşek, and now greatly looking forward to our conversation today with Governor Karahan. Today's discussion will offer valuable opportunity to hear directly from the governor about Turkey's central bank strategic approach and the latest developments in the monetary policy, inflation trend, household expectations, and many others. And we will definitely discuss digital currency and how the trend is being affected with all these developments. We all know that Governor Karahan has been very active during the IMF-World Bank week, and he yesterday made an excellent presentation. I'm sure he will also touch base on that. Without further ado, I'm pleased to give Dr. Fatih Karahan the floor to brief opening remarks and also the floor for Charles' great moderation. So floor is yours. Thank you.
Thank you, Defne. Thank you, Defne. It is indeed a great honor for the governor to be here with us on the final day of our side events for IMF-World Bank Annual Meetings 2025. So I thought I'd give you an opportunity just to run us through some of your policy priorities right now. When you inherited the portfolio, the priority was already to reduce inflation, and we know this has been difficult, but we have seen some success. There is obviously a very tight rate that you've maintained. Some criticism about your reducing it recently, but maybe you can run us through some of your latest thinking.
Thank you. First of all, thanks for having me. It's a great pleasure to be here. I want to go back maybe 2 years and start from there. We had 3 major priorities regarding the macro-financial stability in Turkey. One of them was the sufficiency of central bank reserves, international reserves. The second one was the large conditional liabilities on the central bank balance sheet, which is the FX-protected accounts that had reached $143 billion at its peak. That had to be winded down. And the last one was price stability. But of course, the root cause of all the 3 problems is the high inflation environment that the country was in. And so we recognize that price stability is the most important goal. And once we address that, all the other problems will be addressed. So that's why, since day one, we've been laser focused on bringing down inflation to restore price stability. I would say, looking back, we fully addressed the first 2 issues in terms of reserve adequacy. The markets don't follow our reserves day to day anymore. That means they're not worried about it. And the balance of FX-protected accounts have come down quite a bit. Regarding inflation, we've made a lot of progress. This is on the backdrop of a massive earthquake that we had, which meant that government spending will have to go up, and there will be a lot of construction activity. Inflation expectations that were unanchored, and an economy that's running really hot, and on top of it also an exchange rate depreciation in an environment where the pass-through is quite high. So inflation back then was on track to reach had the potential to reach 3 digits. We started monetary tightening. As a result, we managed to cap inflation at 75%, and since then it's been on a downward trajectory. The latest reading is 33%. The downward trend has slowed down a little bit recently, which we are taking note of, is important. But we also view the distance covered towards price stability as very significant and encouraging. Still at 33 at the moment, so far from our mandate of 5%, medium-term mandate, and that means we have more work to do. The direction is clear. We remain fully committed to restoring price stability, and to do that, we are going to maintain the tight monetary policy stance until inflation converges to our 5% mandate. But along the way, we'll make sure we reach our interim targets, and then through that, single-digit inflation and to 5%. So in short, I'll say that Turkey continues on its path to price stability.
Thank you very much. Maybe we could drill down a bit on this point of anchoring expectations. So there's the academic side that economists study, and there's the really practical side. And in Turkey, consumers are used to there being high inflation, and their behavior has adapted to this. Turks are quite good also at managing the currency volatility, and therefore they have invested in other assets like gold. But the fact that gold has appreciated so much recently, I think we're above $4,000 an ounce now, then this has an effect that comes back to Turkey because there's a wealth effect, and then the households feel that they can spend more. There's also the volatility of your region, which is another reason why inflation has been so high, and of course the natural disaster that happened now 2 years ago. So my question is, how do you anchor expectations when there are always new things happening that make inflation difficult to manage? Some of it is to do with your region, some of it is to do with how Turks have adapted to the fact there is high inflation in the first place. So what's the medium-term path to re-anchor the expectations given those difficulties?
So overall, it would be fair to say that over these 2 years, we've had a lot of headwinds and not many tailwinds, unfortunately. You mentioned a bunch of them. It was the earthquake spending and the gold price appreciation and other things, and inflation being unanchored. It's really important to get a contribution to this inflation through a decline in inflation expectations. We really emphasized that since day one. And even when a lot of data was coming in favorably last year, when we were holding steady the policy rate, we emphasize that we're not seeing enough progress on inflation expectations, and we want to see that. And I'm not talking about just the market expectations, but also that of the firms and of the households. And we waited until we saw some sufficient progress on those. They started moving down meaningfully, and then we kind of followed. Now, in the case of managing expectations, of course, there's different sectors, and their expectation formation is differently. Market participants, by and large, they follow central bank announcements. They follow data day to day, very carefully, and they form expectations accordingly. And their expectations have come down quite a bit. Regarding the households and firms, their expectation formation is a little bit different because they have a history of past inflation being really high, and the central bank lacking enough credibility to move those expectations down just by committing to a tight policy stance. So what's going on is inflation expectations are moving down as inflation is coming down. So it's mostly a function of the inflation data. People believe it when they see it.
Mm-hmm. And one final question on how you engage with the households and the firms. I saw recently that trust in your institution has declined a little. I mean, this is understandable given that you are behind the tight monetary policy, which isn't going to be popular. But how do you feel you need to engage with the firms and the households to better explain the policy? And how are you getting that across?
Look, credibility is not established overnight. It's a process that takes time, and we've made some progress, but we have some more way to go. It comes as a result of consistent, persistent, and coherent policy implementation, and that's really what we're trying to do. The study you referred to, it compares, the last time that study was conducted is in 2017, so it's hard to say that it's been consistently declining down. I think we've made a lot of progress. How you can see that progress is if you look at actually de-dollarization, for example, among many other metrics. People have a lot more trust in lira. We've seen massive de-dollarization in the banking system. 2 years ago, about a little bit over 2 years ago, the share of lira deposits in the banking system was about 30%. Right now, it's around 60, it's sometimes 59, sometimes 60, but around that level. This is a massive trust. It shows that they trust the central bank to do a good job in defending the currency. So overall, there's progress. It's going to be a slow process, but we're determined to keep the progress going.
Thank you. So I have a question on, well, it's essentially about de-dollarization, but also the modernization of how we treat currencies. The central bank that you manage has been quite at the forefront of managing digital currencies. Digital lira is something that we at the GeoEconomics Center have studied, and we've had good conversations with your colleague and namesake, but I believe there's no family relation with Fatih Karahan, but we have very good conversations with her. So I was wondering if you could update us on progress on that, the digital lira, and how your bank also plays a role in managing cryptocurrencies and warning households about some of the risks.
So payments area has been traditionally, for a long time, it was a boring topic for central bankers because there was no innovation for decades. It was something that central banks had to do, and if it worked, it worked. If it broke, it was a problem, but there was really no change. Now it's the opposite. There's a lot of technological innovation that offers new ways for payments, and it's really exciting. There's a lot of different assets and payment options coming up. One is, you mentioned the digital lira, the CBDC project that we have. But then there are also stable coins in the digital asset space and cryptocurrencies. We approach them as any central bank would, through the lens of price stability and financial stability. So starting with crypto assets, they've gained a lot of popularity in the world, and Turkey is no exception to that. If anything, Turkish people are a bit more keen than the average citizen in the world. Their volatile nature makes it a bit risky for the financial system. The linkages between crypto world and banking sector is not that high, but it's increasing. So it is an aspect to follow and to start worrying about, to start thinking about. There was an amendment to the capital markets law that prohibited the use of cryptocurrencies as payments, so they're just as a main method of investment. On stable coins, they offer a really nice option for cross-border payments. They're fast, they're cheap, technologically, there's a lot of advantages. For emerging markets, it's a risky deal. It could lead to dollarization.
Dollar stable coins.
Most of them are 99.9% of them are dollar backed.
You're aware of any lira stable coins?
I think there's some in the works, but I don't know how, I don't know the status, to be honest.
You're not the only market that would be worried about dollar stable coins, because
a lot of them, because a lot of countries have measures to contain capital flow volatility. So, for example, we have restrictions in the offshore swap markets to limit exposure to offshore markets. But when you have stable coins, it's harder to enforce these things. Mm-hmm. So this is one area. Then the CBDC is more of a public version of that. It also offers an alternative for cross-border payments. It's exciting. There's a lot of design issues. So we're working on the second phase of the project, where we're discussing what features the CBDC, the digital lira, should have. It should be done very carefully, because if not done right, it poses an alternative to the standard traditional banking system, and then you get into issues regarding financial stability. But that's where we are at the moment.
Mm-hmm. What's the response been from firms, from households in the pilot phase?
There's a lot of interest. In the pilot phase, we just made some transactions. But they're not widely used yet. But there's a lot of excitement, and we invited private sector companies to contribute to the project as well. So there's going to be a public-private engagement on that.
Thank you. So I was wondering if we could move to the more sort of macro side of your mandate. Turkey is a trading nation and really at the center of things. And yet this year in 2025, global trade has been disrupted by mainly decisions coming from this side of the Atlantic. Now, when we were discussing with your colleague, Mr. Şimşek, he reminded us that Turkey mainly does trade through free trade agreements, and so it is somewhat isolated from some of the volatility. Although I did see that you were moved up in President Trump's trade tariffs from 10 to 15%. But I was wondering how you as a central banker saw some of these disruptions and how you were trying to navigate them. Turkey has a trade deficit currently, although it is coming down. I was lucky enough to collaborate with the Turkey Center to write a report on this, how there are paths for Turkey to improve, how trade contributes to prosperity in Turkey. But I was wondering how you, through your policy decisions, try to improve these things.
Yeah. So first of all, obviously it's an uncertain environment. It's a highly volatile environment. That means two things. Yes, there are more risks, but there are also more opportunities. And historically, Turkish companies have been very resilient, and they've been very good at taking advantage of some of the opportunities that might arise. In the end, we'll see how it plays out, but there's a positive spin to that as well. Overall, the bigger issue regarding trade at the moment is the global growth, because some of our main markets, especially Europe, is one where growth is particularly low. And if anything, actually, growth is low, but Europe's imports are declining. Mm-hmm. That means our market is shrinking. Now, our exports are holding up pretty well, and if anything, actually, they're going up. And that's thanks to our market share increasing. So in terms of competitiveness, we're still...
is this in Europe or in other markets?
This is in Europe, specifically. Now, with regards to US, there could be opportunities. Again, yes, you mentioned the 15%, but it's much less than some of our competitors in certain industries. So that could put us in a, relatively speaking, more advantageous position. So that's a plus as well. At the end of the day, we'll have to see how it plays out.
Mm-hmm. In the report, I just noticed that yes, absolutely, there are many advantages Turkey can rely on, and the audacity of Turkish firms is certainly one of them. But some of the inputs that go into the exports that Turkey is still exporting and successfully, those inputs are very dependent on imports from China and from other parts of the world. So we don't need to go into the detail of trade policy, but I'm just curious how you, as the central banker, are making sure with your high interest rate policy, and we've been through the reasons why it's there, but what additional policies can be there to make sure that firms can improve their competitiveness within Turkey and keep investing?
As far as the central bank is concerned, our main priority and the only priority is price stability, and that's the number one problem facing the country at the moment in terms of the economic outlook. So we prioritize that over anything else. Turkey's exports are primarily driven by external demand rather than anything else. Yes, the exchange rate also matters, and there's been some real appreciation in the exchange rate over 2 years, especially in places where, in labor-intensive industries, this appreciation is a little bit larger, so there could be some pain there. But again, our focus is on price stability, and honestly, sustainable competitiveness doesn't come from the strength of your currency or weakness of your currency. It comes from productivity increases. It comes from lower and more predictable inflation, which is price stability. So eventually, we're making a lot of progress towards price stability that will reduce the cost of uncertainty and will support longer-term funding for these companies, and overall the climate will be just much better.
Very clear order of priorities there. So in my final question, I thought we could perhaps discuss why you're here this week, the institutions that we're all engaging with, the World Bank and the IMF, but also the US government. Many of your colleagues, and I suppose you, when you come to Washington, try to engage with the administration and the Fed. So I'm simply wondering what your main message has been when talking to the institutions here. And many of your counterparts have told us that one of the main things they've been saying to US counterparts is that, yes, the markets have digested some of the decisions taken early in the year, but they still need a little bit more certainty about the direction of travel. So maybe a two-part question. First of all, your conversation with the institutions, the World Bank, the IMF, their projects in Turkey. Have you been able to have any conversations with them about that? And then secondly, what your conversations have been like with your counterparts in the Fed.
So I've had a lot of bilaterals and a lot of other meetings, this time not with the Federal Reserve. My deputy governor, Ms. Karahan, met with one of the governors at the Federal Reserve. At this time, I did not join the meeting. Overall, it doesn't matter who the other party is. We tell them about where we are, where we're coming from, and where we are headed. And overall, the reception is really, really positive. As you said, it's a challenging problem to deal with, which means it's going to take time, and it is taking time. It's like running a marathon, you know, you have to persist, you have to keep your pace at a certain level and not give up, and that's what we are here to do.
Thank you very much. So we thank you, Mr. Governor, for coming to see us during a very busy week. You're always welcome back at the Council, of course, and this is day 5 of World Bank IMF Week, the 4th big day, because we had a day off on Monday, at least some of us did. So thank you very much for attending, thank you very much for listening, and we wish you good luck in your meetings.
Thank you for having me.
Thank you.
Thank you.